Hi, and welcome to this webinar, this recorded webinar on buying a home in an inflationary market. So it's brought to you by me, and I am Karen Jones, and I've been helping families for over 40 years now, and I believe in home ownership. I believe in doing it the right way, though, and the right way is with education and letting you see your numbers and understanding what you're paying for and why you're paying for it. I find that that's vitally important for you so you can understand the process. So what we're going to do is jump into this webinar, and we're going to talk a little bit about credit. We're going to touch on the cash needed to close and what are your next steps? How would you get yourself prepared? So let's go ahead and jump right on in. So first of all, let's talk about reasons of why to buy. Owning a home is not only a wonderful place for you to raise a family, get your roots going in the community, be a part of a community, but when you own your own home, you get to invest in yourself and in your future. So when you're paying rent, you're actually paying somebody else's mortgage. Most investors use mortgages to purchase the investment property because they like to leverage other people's money. And when they're leveraging and using other people's money to buy a home, and when you're making that monthly payment, you are paying their mortgage and they're getting all the appreciation. When you purchase your own home, you're using leverage as well, except you're going to be making your monthly payment yourself, but you're using somebody else's money for the bulk of that purchase. So you are leveraging just like an investor would leverage. And when you do own your own home, it's usually like a forced savings account. Over time, real estate values tend to increase. And we know this back from historical data. You've seen this yourself. You know this. If you go back and look at and Google what did a house cost in the 70s, you're going to see that the numbers are much lower than what they are today. When you do own your own home, there is going to be substantial tax savings to you if you do itemize on your tax return, which is going to enable you to keep more of your payroll taxes because all of that mortgage interest and the property taxes, you get to deduct off of your income. And then it's also a little bit of a hedge against inflation. So I get asked this question all the time. Is now the time to buy? Well, I believe that paying rent is not a good investment for you because you're basically, like I already alluded to, is paying somebody else's mortgage. You're not getting any of that benefit from owning that home whatsoever. No tax savings. You have to get permission to paint the house. You have to get permission to have a pet. You don't get any control over anything. So to me, paying rent is just not a good idea. I think if you can own your own home, you should. So what's happening in real estate today? So let's first go to my website real quick. And on my website, homeloansbykarenjones.info, if you go over here to home buyer tools, you can actually see this Arizona home values. This professor at ASU has been providing city rankings for, over 30 years now. And you can see as we scroll down here, these are the cities and these are the changes. You can see that appreciation is still occurring. Now, we are not up in the 35% like we were for the past few years, but we are still seeing appreciation levels increase, which is important for you to know and understand. And we also know that currently, right now, it's changed from a seller's market, as it's been for the past few years, into more of a balance to a buyer's market. You probably noticed online that inventory is growing and you're seeing a lot of price reductions. I don't believe we're going to see price reductions from what I just showed you, but we are going to see prices stabilize, which is good news for you. So do you buy now or do you wait? And that's a question that only you can answer, and only numbers can really help you make that answer. Interest rates in an inflationary market, inflation is the arch enemy to mortgage interest rates. So interest rates are continually increasing. And until the Fed gets inflation under control, we're not going to see a stabilization in mortgage interest rates. However, If you, like right now, as of 10/6, the interest rate's at 6.5% with an APR of 6.51 based upon this information down here. If you were to buy a house at 300,000, that's what that principal and interest payment would be. This is not taxes and insurance and HOA dues. This is just your principal and interest. This is none of the other fees associated with the housing payment. And that's why you want to get educated on your numbers, because you want to understand what private mortgage insurance premium is, what is taxes and insurance, what is HOA dues. You need to understand what that full housing payment can look like. But in this particular situation, just the principal and interest for a $300,000 purchase is about $1,896. And as you see, as interest rates go higher, your buying power decreases. So if you were considering on purchasing a home, the sooner you get into your contract where we can lock your rates, the better protected your interest rate is going to be. Now, I recorded this back on 10/3, and to me, it was a good way for me to talk about what's happening in the markets right now. So I thought instead of me repeating it all, I'll just play the video. So here it comes.
Hi, it's Karen, and it's another beautiful day here in Arizona, and I wanted to reach out to you today with some news about the mortgage industry and interest rates. Recently, the Fed hiked the Fed's funds rate by another 75 basis points, and this was the 5th rate hike of the year. And the Fed also projects hiking another 1.25% this year, which may mean another 75 basis points in November and then another 0.5 point in December. Now remember, the Fed's funds rate is the overnight borrowing rate for banks, and it's not the same as mortgage interest rates. But you might be wondering, how does this move in the Fed funds rate affect mortgage rates? And that's a vital question and an important question. Mortgage rates are primarily driven by inflation, which right now is at a 42-year high. When the Fed hikes the Fed funds rate, they're trying to slow down the economy to curb inflation. And if they're successful in doing so, mortgage rates should also decline. History proves this during rate hike cycles for the past 50 years. Now, with that being said, if you are able to purchase a home, now still may be the best time to do so, even with higher interest rates. Once we prepare your loan for credit approval, which will make your offers as strong as a cash offer, in most cases, the sellers are more open to negotiating the terms to help you proceed with your purchase, from lowering sales price to helping paying for closing costs. I'm Karen Jones, and I'm here to help you navigate through these uncertain times and find you the best opportunities for a purchase or a refinance.
Home purchases are meant to be a long-term investment. It's not something that you go buy and then 2 years later you go sell. It's meant for you to be a place for you to raise a family, create memories, plant your seeds in the community, be a part of that community, and just, get to paint the house that you want the way you want to paint it, have the pets that you want to have. It really is meant for a long-term investment. And that's why over time, the longer you're there, the more benefits you receive as an actual homeowner. Homeowners who retire usually have about 45% greater net worth when they own their home versus just a renter. So just another example of how owning your own home is going to help you with your overall family wealth. So what about home repairs? Well, right now as a renter, if your garbage disposal breaks in your house, you would contact your landlord, and guess what? That landlord's responsible to fix that garbage disposal. When you become a homeowner, you are your own landlord, so you're responsible for fixing that garbage disposal. And as an example for that garbage disposal that broke, you would call your home warranty plan. They would send out a person to fix that garbage disposal, either fix it or replace it, and you just pay a small service charge fee. So it saves you a lot of money of going down to Home Depot, getting a new garbage disposal, hiring a plumber to install it, etc., etc. Now, if you get the sellers to pay for that, many sellers are very open to pay for that first year. And just remember, your real estate professional needs to get that negotiated into that purchase contract. So let's talk some about credit. We do get what's called a tri-merge from Equifax, TransUnion, and Experian. And you can get a free copy of your credit report by going to annualcreditreport.com. They're going to ask you a lot of questions. If you don't answer those questions accurately, you will not gain access to your report. So take your time in answering those questions to make sure you get the questions answered accurately. I do recommend that you check your credit at least once a year to make sure what's being reported on your credit report belongs there. And if it doesn't belong there, you want to take the steps to get it fixed. The credit scoring system is an algorithm. 35% of the algorithm's information is based upon payment history, 30% amounts owed, and you can see the rest of that pie chart there. Which means 65% of your credit score is based upon simply, do you make your payments on time and how much money you owe? These are the phone numbers of the credit reporting agencies. If you have any challenges with getting information off of your credit report or have a dispute on something, these are the folks that you need to contact. Disputing a credit item on your credit report does not resolve it. When you dispute something on your credit report, it just tells the algorithms to skip over that disputed credit line. So when you go to apply for a home loan and you have a disputed item on your credit report, it may be required that we get that dispute removed so we can find out what your real credit score is. The credit score is the first thing that's looked at when we do a pre-qualification. Here's a sample of a credit report itself, and you can see it has the debtor's name, it has the truncated account number, how long that credit line has been opened, how much you owe, and what your credit limit is. Your credit report will show open trade lines, closed trade lines, and delinquent trade lines. If you did experience a foreclosure or a bankruptcy or a short sale, you will have a seasoning period before you can participate in a home loan. For example, for a conventional mortgage, if you had a foreclosure, you would have a 7-year wait period before you can get another conventional home loan. If it was a FHA home loan, there's only a 3-year wait period, and you can see VA, there's only a 2-year wait period. So these are all the different timelines. This is important information for you to understand in the event you did have a credit challenge of either a bankruptcy, short sale, or a foreclosure, so you know what your seasoned time expectations are. Now, the higher your credit score, the stronger your chances of success. And the credit score is the first item that's looked at and opens up the lending opportunities. But the credit score is just one aspect to prepare for. We also have to take a look at your debt to income ratio. So we're going to ask you questions about your income. That income will be verified with your employers or wherever that income is coming from. And then we're also going to take a look at your cash that you have in your bank accounts. We're going to figure out how you're going to manage your cash to close requirements. And the cash to close requirements covers your down payment, your closing cost, and the development of your impound account. 37% of home buyers cited that they did not have enough money saved up for a down payment, and home buyers are not aware of the extra cost associated with buying a home. So the cash to close is the second most important feature, because if you don't have the cash to close, your loan won't go through. So you want to make sure that you review your buying plan with your lender prior to shopping for a home to ensure that you have enough money to close. And you definitely want to get yourself educated about your closing costs so you are prepared. You don't want to be caught surprised like this couple here. So what does it take these days to buy a home as far as cash is concerned? Well, down payments. Every loan program has a different down payment requirement to it. So depending upon which program you're using will dictate what your down payment requirement is. You'll have loan fees. You'll have appraisal fees, and most lenders do require that you pay for your appraisal fee up front. So make sure your lender and your realtor guide you through that process to and have you pay for that appraisal report at the right time. And then you have to shop around for homeowners insurance. Homeowners insurance protects your house from fire and flood and theft and things of that nature. And each homeowner insurance provider has different coverage. So you want to make sure that you understand your coverage, what your premium would be. And then once you give them permissions that, yep, that's my insurance for your house, you need to let your lender know about that. And then we're going to develop something that's called an impound account for your taxes and your insurance. Now, that is a part of your closing costs as well. You can think of an impound account as a savings account attached to your mortgage. So every single month when you make your monthly payment, the bank will be collecting for your taxes and your insurance as well. Now, the benefit to you is this. Next year, when those property tax bills come due and the insurance bill comes due, you don't write a check from your checking account to pay for it. They will bill your servicer or your bank, but they're really the servicer. And what they will do is they will pay for the property taxes from that impound account. Every year, they will analyze that impound account to make sure it's properly funded. And if it is, great. If it isn't, then if it's overfunded, you'll get a refund. If it's underfunded, you'll get a letter that says, hey, your property taxes went up. We're going to adjust your monthly payment. And that's the only way your monthly payment can change is if your property taxes and insurance increases. Because remember, once you have that loan fixed, that stays fixed for 30 years. It does not change. So having enough funds and understanding that impound is very important as well. So where will your down payment money come from? And how much do you have saved up? And do you qualify for down payment assistance programs? These are things that your lender will uncover for you and educate you on. So it's important for you to spend time with a good lender who is willing to take the time to discover all of these things for you. There are down payment assistance programs. There's USDA, which is actually a loan program that has 100% financing available to it. The Home in 5 is another down payment assistance program. There's Neighborhood Stabilizations Program. But the program that still has money available is from the state of Arizona, even in the inflationary times, and it's called Home Plus. They're offering up to 5% assistance. So if you want to learn more about it, you need to reach out to me and let me give you some education on it. You can use gifted funds to help you purchase your home. You can use a 401k loan, or you can even do a 401k withdrawal to help you purchase a home. Seller credit, which is going to be negotiated in your purchase contract, can only be used to pay for closing costs. So it cannot be a part of your down payment. Your down payment needs to come from your own sources, either gifted funds or down payment assistance or your 401k, something from your own source. Now, how much of a home can I afford? This is when you want to reach out to your loan officer, and they're going to help you determine this. You're going to want to let them know what your budget allows. What do you want your housing payment to be? And then they will do a reverse math problem to tell you what your buying power is, and then you can work the numbers from there. If you do have new debt that's not showing up on your credit report, you want to let them know about that, because that will be caught later on, and we don't want you to have failure later on. If you have any income changes where you had increased hours or reduced hours, or you got a new job, you need to let your lender know so they can keep that file updated. And then you want to receive buyer pre-approval. And in my opinion, all my clients go through credit approval, because credit approval is the best way to position you for home ownership success. Now, if your credit score is not where it needs to be and you don't have the right amount of cash yet, then you definitely want to create a plan and learn what your numbers are so you have something to strive for. Work with a lender that's going to educate you on your home ownership opportunity so they can give you a plan, like if you were going on vacation, you would want to know a plan of where you were going. If you don't know what it takes to get to be a homeowner, you're not going to get there. So you need to work with a lender who is willing to spend time with you and make your plan. Once a plan is created, then work the plan. Stay in contact with your lender with updates and keep that dream alive. The power of planning is real. Last year, 14 families now own their home from the action plans that we created together. They followed the plan and now they own their own home. So it does work. Keep your dream alive. If you are ready to proceed, then what are the next steps? Well, you want to reach out to your loan officer and get pre-qualified, get educated on your numbers, understand what your buying power is, understand how much cash you need to make it all come together. And then, like I already talked about, credit approval is the golden standard. It's going to allow you to shop for your new home with confidence, and it's going to allow your offers to be as strong as a cash buyer. So credit approval is vitally important. I believe in it, and it's going to take away the stress from purchasing a home, and it's going to allow you to move through that home loan process with ease. You might be asking, well, do I need a real estate agent to buy a house? Shouldn't I just go directly to the listing agent? And I would recommend against that. The listing agent or the new build agent, they represent the sellers of that particular home. So when you choose a realtor, they are working for you, and they will use their expertise at no cost to you. They are trained negotiators. They understand the contract, and they become your advocate. So you definitely want to take advantage of using a real estate professional so they can guide you through the process from start to finish. If your loan has been credit approved, then you definitely want to introduce your real estate professional to your lender. We need to let them know what your buying strategy is and what we are using as what program we're using for you, so they know what loan program you're using. None of your personal information is shared with them, but they do need to understand what your buying strategy is. We're going to offer them a credit approval letter with a pre-qualification form so you can start shopping. You want to let your agent know what you want to buy and what your buying power is and what your needs are in a home and where do you want to buy and what homes are available. These are all great property questions that you want to address to your realtor. And then once you start shopping for a home and you find a home that you really like and want to make an offer on, make sure you reach out to your lender and provide them with that particular property so they can check your numbers for you to make sure everything is going to work out. Because every home has its own property taxes assigned to it. It may or may not have HOA dues. So we just want to make sure that the numbers are all good. And we also want to show you what the current interest rates are to make sure that the overall payment is good for your plan as well. So then you're going to submit the offer. And upon acceptance of that offer, we're going to have you order your home inspection. And your real estate professional will help you with this. Once you pass inspection and you know that's the house you're going to buy, you're going to let your lender know so they can order that appraisal. We're not going to have you pay for that appraisal up front until we know for sure that that home is the home that you want to proceed with. The next step is to start shopping around for homeowners insurance. And once you choose your provider, you're going to accept their offer, and then they will notify your lender that you've accepted their offer. Then we're going to proceed with the processing of your home loan. We're going to get you into final review, and the underwriter is going to say, yes, final review, congratulations, and our close of escrow date arrives. So please know your realtor and your lender will keep you notified of any and all updates. And if they need information from you, they will definitely reach out to you and let you know. So then we get to your close of escrow date, and congratulations. You get to celebrate because you are now a homeowner. You are a homeowner once that deed of trust is recorded on the county recorder's office. That's when legal ownership changes from the seller to you, and that's when your real estate agent can give you the keys to your new home. So buying a home is all about strategy. When you're ready to get yours, I'm here to help. So give me a call today. Thank you for attending. I hope you found this information useful. Buying a home in an inflationary market makes great sense as long as you can qualify for it. So make sure you check with your lender or give me a call. I'd be more than happy to help you from start to finish. My name is Karen Jones from AmeriFirst Financial. I'm a certified mortgage loan advisor helping families for over 40 years, and I believe in homeownership. Bye for now.